Kitco News. Special coverage of the Vancouver Resource Investment Conference is brought to you by First Mining Gold.
Here I'm Michelle Makori. I'm the editor-in-chief at Kitco News, which is the global leader in precious metals coverage. And it is my pleasure to bring you the Kitco News Ultimate Gold Panel. So let's bring on our esteemed panelists. First up, we've got Robert Kiyosaki. Robert, come on up. Robert is the best-selling author of Rich Dad, Poor Dad. That is the #1 personal finance book of all time. He's an entrepreneur, investor, educator, and personal finance expert. And his books have been translated into... Give it up for Robert. Have a seat, Robert. His books have been translated into 46 languages. Next up, Lobo Tiggre, leading resource investor and speculator. And Lobo is the founder and CEO of Louis James LLC. He's the editor and principal analyst at the independent Speculator. There we go. Give it up for Lobo. Navigating through the foliage there. It's a bit of an obstacle course to get to the stage, make sure everybody's awake. And of course, Rick Rule, president and CEO of Rule Investment Media, a platform he founded to educate investors interested in commodities. Rick is also the former president and CEO of Sprott U.S. Holdings, and he's been a professional investor and speculator in natural resources for over 45 years, but he certainly doesn't look it. Rick Rule, come on up.
He has more experience getting on the stage without hitting anything than I do.
All right, nothing like a little bit of ABBA to kick things off. Money, money, money. All right, so 2023, looking good for investors so far. Gold has had a solid start to the year, up about 5.5%. And there are several factors that indicate that that bullish trend could continue. We have expectations that the Fed is going to slow down the pace of its rate hikes before taming inflation. That will lead to a weaker dollar, which is, of course, good for gold. Geopolitical tensions are escalating, not so good for the world, but good for gold. The U.S. and Germany sending tanks to Ukraine. Now Ukraine wants some F-16s on top of that. And we've also seen this interesting trend from central banks that made record gold purchases in the third quarter of 2022. Data for the fourth quarter is still pending, but it looks like central banks around the world are hoarding gold, and that trend is set to continue. So, of course, the big question is, will 2023 be the year that gold hits new all-time highs? And gentlemen, that is going to be the overall thesis for our panel. And Lobo, I'd like to start with you, because I know you love making specific price predictions. Now, I'm going to start with you, Lobo, because I had the pleasure of having you on last year's gold panel here at the Vancouver Resource Investment Conference. And you made the point then that the reason that gold hasn't really broken out is because people still have faith in the Fed. Now we have the Fed getting ready to launch its first meeting of 2023. Markets are expecting a 25 basis point hike and potentially a pause in March. That's the general expectation. What is Lobo's expectation? And do people still have faith in the Fed?
Oh, it's a horrible thing to have to call something the day before it becomes fact. So this could be outdated by the time anybody gets home. But I do think the Fed will do as the market has blessed it to do. I think 25. Anything else would be unnecessary. I do think they'll also probably talk QT, talk tough to try to prevent market conditions from, contradicting their tightening. That said, the confidence question is really interesting because base effects alone are affecting the reported rates of inflation. So it looks like the Fed is winning. This is actually bolstering confidence in the Fed. So I'm trying to condense a lot of things here, but I actually think this is very optimistic for the price of gold. Because if in the face of this headwind, in the face of decreasingly negative real rates, in the face of massive rally in the dollar we saw last year, gold held up, traded sideways for the year, that was actually a big beat. And to answer the question, I'll be done. I think that the team transitory has become team soft landing. I think that's going to blow up. I do think that confidence will go away. And I do think that'll be a big boost for gold this year. Not someday, not some when, but this year.
This is a very rare occasion that Lobo Tiggre is giving a prediction with a specific
It's
timeline.
not a prediction.
So you do think that 2023 is going to be the year where gold makes a new all-time high?
Directionally, I'm happy to go on the record and say, yes, I think we're going to see higher gold prices this year, significantly higher gold prices. I think a new nominal all-time high is an easy target to hit.
Mm-hmm. And your general expectations are that the Fed is going to cave in?
Yes.
And people lose faith. Well, I saw...
Not right away.
Yeah,
when the pain
half.
happens, when they remember the other mandate, yes.
Well, Rick Rule, I saw you nodding in agreement there. What is your macro outlook then?
No, I think my outlook is very close to Lobo's, with the obvious disclaimer, well, two disclaimers. The first is I'm not an economist. The second is that I have a new banking organization, and I'm in front of the Fed, so there's only so many anti-Fed things that I'm inclined to say, just talking my own book for my own self-defense. I am impressed with the relative strength of the U.S. economy in the face of a doubling of interest rates. My suspicion is that the impact of that increase in interest rates has lagged. And if we begin to see more disruption in the economy, I think that the Fed will do, most of you don't have a memory of this, what they did in 1975, which is to say turn tail. I also agree with Lobo's choice of the words, the nominal price of gold, which is to say that if you measure gold in current as opposed to constant dollars, that we will cross through a nominal high. It will have less purchasing power than it did the last high. But and this is just a wild guess, my suspicion is that gold will, at some point in time in the not too distant future, which is to say within 5 years certainly, cross its old high in real as opposed to nominal terms. I, unlike Lobo perhaps, look myself at real interest rates in terms of the strength of the gold, the arithmetic around the U.S. 10-year Treasury, where the Fed pays you 3.5% in a currency that's depreciating in value by 7% compounded, tells me that gold has to win a fight against what Jim Grant calls return-free risk. And I think gold can do that.
All right. And succinctly put, you do think we will see new all-time highs for the gold price in 2023?
Always looking for a headline. She's really good, ladies and gentlemen. I don't know if you watched her rope me in there. Yes, ma'am.
All right.
Yes, ma'am.
We've got two yeses over there. Robert Kiyosaki. Robert, we know you're a gold perma bull, if you will. You recently tweeted that you expect a global recession. So what does that mean for the price of gold? Do you think we will get new all-time highs this year?
I'm kind of like Rick Rule and these guys here. 30-something years ago, I was one of these little guys as a junior miner. And I've been waiting for gold to keep moving because my first gold coin I bought was in Hong Kong in 1972. And I've been a gold bug ever since. I paid $50 for that. It was a Krugerrand.
Oh, from my home country, South Africa.
I love South Africa. And I had to smuggle the Krugerrand into the U.S. I was a Marine pilot in Vietnam. And I said, why do I have to smuggle it in here? You know, so that, as a young man, I'm going, what's going on here? So I think the Fed is a criminal operation. It's always been one. So, and not to be political, but how in the world can they give Bernanke, what is it, an Academy Award? No, Nobel Prize. I mean, he should get the Academy Award for the biggest liar going. I mean, oh my God. So I'm a hardcore gold bug. I agree with records. I think it's 15K. I don't know when. But when I look at the debt versus gold. But if I tell a quick story, the reason I'm optimistic is the American public is finally waking up that something is wrong. And I was telling Michelle yesterday, my friend Daniel Samuelson from American Gold Exchange in Austin sends me a 1964 quarter. And for most of you guys out there know, that was the last year that it was real silver. Because in 1964, I was 17 years old, and I was looking at a quarter and a dime and a half dollars. I said, why is it copper? So Dana Samuelson from Austin sends me this coin. So I just happened to be in Safeway. And I'm now the Safeway salad bar guru. So the women working behind the salad bar said, what should I invest in? Because their 401ks are coming down, the house prices are coming down. And I just happened to have this quarter. It's the very same one. So I held it up. I said, this is a quarter. Give me $3 for it. And their brains fried. They went, why would I give you $3 for a quarter? So I held it up and I said, you notice it's solid silver, but why would I give you $3 for a quarter? And their brains are frying. It doesn't make sense to them. And so I said, okay, give me $2 for it. And they kept saying, well, why? Why? And it was a very simple answer. I said, this is real, this is fake. And they went, and so I held up a $5 bill. I said, because it's really worth this, 5. And I think the lesson is, the danger is, the American public is catching on to the Fed's criminal activities. And my concern is, as a guy who flew in Vietnam, that's the cause of revolution. When confidence goes out of this, we're finished. So on a very pessimistic view, I don't want to see what's coming. And so this Ukraine war, Russia, China, and all this is a deception. And my concern is war. I fought in Vietnam, you and I talked about yesterday.
Yeah.
In 76, no, what year was it? 72, I saw a nuclear explosion go off on Christmas Island. And the Americans just bantering around, oh, we have a nuclear war. They haven't seen nuclear. I've seen it. So that's my concern, the most pessimistic view. And my answer is the Fed is a criminal operation. Why did they take over our money supply? How dare they? That's what I want to say.
Well, Robert, I'm going to take that as a yes. I do think gold is going to hit a new all-time high in 2023.
But I am concerned. I'm very concerned.
No, jokes aside, we have had several guests on Kitco News that say be careful what you wish for, including Rick Rule, who's made this point several times, that if gold does really soar, it means that the rest of the world is not doing so well. So it's good to have protection and a safe haven, but it's not necessarily good for what it means for the global society. And on that note, Lobo, I'm going to bring it back to you, because you've made the interesting point before. Look at what they do, don't listen to what they say. See, I do listen to what you say, though. And we do have this phenomenon with central banks around the world, and this could be linked to Robert's point of perhaps faith in the dollar being lost, not only at an individual level, like the ladies in the salad bar, but also on a global level. And we had, according to the World Gold Council, global central banks buying 400 tons of gold in the third quarter of last year. That's the biggest quarterly addition on record. The People's Bank of China was amongst one of the biggest buys, at least from what they have disclosed. And we're waiting for the fourth quarter data from the World Gold Council, but it is likely that central banks continue to accumulate multi-decade levels of gold last year, and will bring this trend forward to 2023. Lobo, what does that tell you? What do you make of that?
Well, I've got good news and bad news. The good news is that it really does tell us that, as J.P. Morgan said, the original, gold is money, everything else is credit. And the central banks at some level know it. The Basel III Accord codifies it. Like, it's telling us that reality matters. At the end of the day, even the central bankers want to, at the very least, hedge their bets and have something real, physical behind there. Now, the bad news is that this lends itself to wonderful storytelling. Oh, the central banks are hoarding gold because they're suppressing the price of gold so they can buy it while it's cheap, and then they're going to remonetize their currencies, and gold's going to go up tenfold. And there's these wonderful stories out there. Some of them make sense. Some of them might even be true. But none of them offer us clear investment guidance. When has the thesis that central banks are hoarding gold ever helped you win in a stock pick? When has it delivered, There were several actual deadlines in the world on the Basel III news. Did any of those cause the price of gold to soar? Right, so just be careful with these exciting stories. You know, it's easy to you can sell anything with these stories. And they create, you know, this thing. So I think it's real. I think it matters. The fact is, they're hoarding gold. That tells us something. But it doesn't tell me what stock to buy today.
But what does it tell us, Lobo? Do you agree that this could be part of a bigger trend of de-dollarization, and that gold is a way of sanction-proofing economies? And if you look at it in the context of the BRICS trying to come up with their own global reserve currency potentially pegged to gold and another basket of commodities still TBD, when you look at it in the context of Russia is working with Iran on a stable coin that is somehow linked to gold, can we start to make assumptions about a growing trend of de-dollarization?
I'm not sure I would link the two. I do see the de-dollarization trend. I think that's real. It's very clear. I mean, it's openly stated by China and Russia, who have an obvious interest for this. I don't think this is a conspiracy theory. I think it's out in the open. So that is happening. Whether the central bank gold hoarding is related to that or not, we'll never know. Maybe 50 years afterwards, a McNamara confession type book will come out where somebody will allege that it was so. We're never going to figure that out. And if you sit there and some guy on Twitter said so and you believe that, and you make investment decisions based on some guy on Twitter said something really clever about the central banks are behind all this, I think you will. Experience is telling us this may not help your investment outcomes. I just think that's really important. It's fine to believe these big macro stories that fit with our own worldview. It's a horrible source of guidance for investment decisions.
But Lobo, just to stick with you, why wouldn't it then lead to gold prices going higher?
It might, but that doesn't mean we know it.
Okay.
And it certainly doesn't tell us what to buy today, other than in a general way. You know.
Rick Rule.
Madam.
To pay attention, to show you that I pay attention to what you say all the time, I'm going to quote you to you. What is inevitable is not always imminent. So why don't you weigh in on this idea of de-dollarization and central banks hoarding gold, and if you feel that there is a link in the trend there?
You know, that's interesting. If you say enough things, one of them becomes quotable in the right circumstance. Thank you for remembering that. And I think that's a great phrase around gold. I do believe that the debasement of the currency, the deterioration of the credit quality of the United States, over $100 trillion in on and off balance sheet liabilities, you have to be concerned about what used to be a bulletproof credit. But most people don't care because most people are innumerate. They don't know what $100 trillion is. The idea that there's negative real interest rates, most people who are getting 3% think they're doing well. That means that over time, as people learn and think about things, that their perceptions change, but they don't change very quickly. People too, I'm struck by your conversation with Lobo, what people want is certainty. Sadly, certainty is not on offer. People want a headline. I don't think that particularly in terms of time, there's certainty. What there is a range of probabilities. And from my point, the range of probabilities points to not merely higher, but probably much higher gold prices. I remember very well the decade of the 70s. You can be forgiven for obvious reasons. You weren't here then. But for myself, I remember gold in the early part of the decade of the 70s having a pretty good run from a price-controlled $35 to $200 in early 1975, and gold had lots of friends after a six-fold move. Then the Fed tightened in 75, and gold fell from 200 to 100. And then the economy went into a tailspin from the higher interest rates. The Fed lost their nerve. And all the people who had been friends of gold after the run from 35 to 200, not all of them, but many got shaken out at 100, and gold proceeded to go from 100 to 850. All of which says, as you suggest, that which is inevitable isn't necessarily imminent. And there are very few certainties. There are just probabilities. All I would ask the audience to do is think through the range of probabilities, understanding that they aren't certainties, and organize their life in accordance with what they see as the probabilities.
And I think that's a sentiment that is worthy of applause. Lobo, sure, is leading the trend there. And I think that's a sentiment that Robert Kiyosaki would agree with, certainly in terms of expanding one's education and being aware of what is going on out there in order to make your own investment decisions. Robert, you touched on the geopolitical aspect, which is a big concern. As I've mentioned, we have the US and Germany now sending tanks to Ukraine. Next step is Ukraine is asking for F-16s. An interesting sign on the possibility of war is that Denmark is now looking at making military conscription for women. They want to bolster their own armed forces. And you will probably remember this, Rick, the doomsday clock. It is now at its highest level of alert ever, 90 seconds to midnight. This is obviously not something to be taken lightly, but how do you see these geopolitical risks factoring in to the price of gold? And I'm going to flip the question, Robert, and be optimistic. If there is a diplomatic resolution to this conflict, let's hope so, what does that mean for the price of gold?
I don't think it has anything to do with Ukraine and Russia. Our problem's internal. You know, how in the world can we run up a $31.4 trillion deficit? How are we going to pay that off? Social Security's bust. Medicare's bust. The baby boomers had the easiest of all. I'm a boomer, first generation. We came into the world. We were born with a coonskin cap on our head. Everything we touched got rich. So we graduate, we buy a house, the house goes up in price simply because of demographics. And then in 1974, when I came back from Vietnam, they put us in this thing called a 401k. And I was already very suspicious about my country. Because after you fight in Vietnam, you realize you're being lied to. So when the 401k came out, I said, oh my God, because the World War II generation, my parents' generation, they got banged in the stock market crash of 1929. And so they had to find a way to get the boomers into the stock market. And that was 1974 ERISA, Employee Retirement Income Security Act. And they started pushing us into the biggest generation in history, Americans. They pushed us into the stock market. So housing prices go up, stock market goes up, bond market goes up, investments go up. The trouble is the baby boomers are now baby bust. So what the Fed does, it doesn't matter to me. It doesn't matter to any of us. The question is, to me, how much gold and silver do you have, physical? And that's what I say to people.
Okay, so we're going to shift away from the geopolitical conversation then and bring it back to one of the reasons that did keep gold suppressed in 2022, and that, Lobo, was the strength of the dollar. You have said that you expect the dollar to weaken this year.
And I was right.
Yes, you have been right so far. And that we're going to potentially see a divergence in trends between the Fed and the ECB. So break that down for us.
We've got 5 minutes left, so just real quick, it was a lot to be said here, but the Fed led the way in tightening. It is leading the way in easing up. I'm generally skeptical of what central bankers say, but the ECB has kind of painted itself into a corner, and it has guided for continuing tightening over there. And the last tightening was 50 BP. So the guidance is for at least 2 more 50 BPs. If that delivers while the Fed is getting to its pause, that's bearish dollar, bullish alternatives, including gold and silver, euro too. But real money, I think, benefits more.
We have seen gold make new highs in other currencies, like the Japanese yen. How do you see that factoring into this?
It's really interesting that you bring that up. I think, what's happening now in Japan is actually historic. The beginning of the collapse of yield curve control there, this is another huge topic, but Kuroda's on his way out. Change is visibly coming there. what the Japanese have been doing for decades has pushed monetary flows internationally to the benefit of the dollar. And if that is changing, that could be a really big tailwind. Bearish dollar, bullish alternatives, including real money.
Okay, thanks, Lobo. Rick, I want to have you weigh in on this idea of ETFs, because that has held back gold from going up. Physically backed gold ETFs saw outflows of around $3 billion in 2022, according to the World Gold Council. Why do you think that is, and what do you think needs to change to get money back into ETFs in order to push the price of physical gold back up?
Are you talking about gold and silver style ETFs like GLD and SLV, or are you talking about the ETF subject generally?
Gold ETFs particularly had outflows last year whilst we saw gold going up.
You know, I think that global apathy, but in particular American apathy with regards to gold is gradually fading. And I think that'll take care of itself. I'm not necessarily a huge fan of the ETF structure for gold, for various reasons, one of which I'm a Sprott shareholder, and I would prefer that people own the Sprott product rather than GLD for reasons of greed and larceny.
But it's an ETF.
But I also believe that the ETFs are an extremely convenient mechanism for people to hold gold along with their other financial assets. The truth is that we've lived through 40 very benign years. Declining interest rates, globalization, inclusion in the workforce. I'm not trying to be woke. I'm just suggesting that we've lived through 40 very benign years. And if one looks at history, gold does well during non-benign periods. I see the world becoming substantially more challenging, and I see as a consequence of that, interest in gold increasing. Many people in the audience won't know that the market share of gold relative to other asset classes in the US market is below 0.5%, which is to say less than 0.5% of all savings and investment assets in the United States are in gold. The 4-decade mean is 2%. I believe that gold will revert to mean, meaning that precious metals won't win the war against the US dollar. They won't win the war against other ETFs. They'll merely revert to mean, which will result in a 4-fold increase in market share and an increase in demand. So the problem, if there is one, around disintermediation in gold ETFs is just a function, I think, of the fondness or lack of fondness that investors have for gold. And I think that's changing all by itself. I don't think the World Gold Council needs to spend a dime to cause that to occur. I think it's going to happen all by itself. Hopefully, ladies and gentlemen, of course, when you allocate your capital to gold, you choose the Sprott product, not GLD, but anyway.
Well, let's quickly touch on allocation. How should people be getting exposure to gold? I know you're an advocate or a fan of gold miners. So what would be the best way to get exposure to gold in 2023?
It depends on the person. There is no one size fits all. If a financial planner looked at my estate and they saw the amount of physical gold I own, they'd say, "Are you out of your mind? You're the largest shareholder of Sprott. You own gold stocks. You don't need to own any gold." But I'm an old man. Gold allows me to sleep nights and stay calm. So I buy gold personally for insurance purposes. As I've told you on your show, I hope it doesn't go up, actually. It does well in bad times. So I think anybody who is concerned about their maintaining their purchasing power needs to own the real thing. They need to own some gold. If they are investors, if they can do some securities analysis, if you think the price of gold is going to go up, you think that gold stocks will do better. So as an investor, not as insurance, but really as an investor, you should buy some gold stocks. And if you're a speculator, of course, all the audience believes they're conservative investors when they're all wild-ass speculators. If you are a speculator and can afford financial and psychological risk, then as a speculation, not as insurance, work real hard and buy some juniors. But the answer to your question, if there's 8 billion carcasses on Earth, there's 8 billion answers to that question as to what the right allocation is.
All right, personalize your portfolio. And I know you offer people to help them do that by taking a look at what they hold through, what is the site again, Rick?
You know, I like you more and more. Any of you who care what I think about gold or natural resources in a personalized way should feel free to come to my website, ruleinvestmentmedia.com, list your natural resource stocks, and I'll personally rank them 1 to 10. Please no pot stocks, please no crypto, please no tech stocks, limit it to natural resources. I'd love to do it, ruleinvestmentmedia.com.
Okay, we are running out of time. Lobo, 30 seconds, final thoughts.
Rick stole my thunder there. Never ever forget the difference between bullion, insurance, savings, real wealth, physical wealth, and speculation. I'm a speculator, and just keep that in mind.
All right, by show of hands in the audience, if I can make it out, how many of you think that gold will hit a new all-time high in 2023? Rick, help me eyeball this.
I think the eyes have it.
The ayes have it. All right, well, there you have it. Thank you all. Robert Kiyosaki, Lobo Tiggre, Rick Rule, always a pleasure. See you next year.
Thank you.
All right, thanks.
Kitco News, special coverage of the Vancouver Resource Investment Conference, is brought to you by First Mining Gold.